March is here, and right now, there are two fairly simple trades that are looking more appealing to me than any other on my watch list of 100 plus stocks. And I put them in the title, so you already know what they are. The Russell 2000 Small Cap ETF, or IWM, currently has one of the most bullish technical setups that I can recall seeing in a very long time. And on the polar opposite end of the technical spectrum is Apple. Apple currently has one of the most bearish technical setups that I can recall seeing in a very long time. It's actually pretty crazy how perfectly inversely correlated or opposite that these two charts look. But that provides for a great split trade. And in this video, I not only want to talk about the technicals on these two, why the IWM looks so good and why Apple looks so bad, along with some price targets for both of them, but I want to talk about why the fundamentals, why the macro momentum is also playing heavily in favor of small cap stocks right now. If you guys have been following along or are members of Waves Capital, then you would know that for quite a while, our macro thesis has been that small cap stocks will begin to catch up to large and mega cap stocks. And we're seeing that happen, and I expect this to really gain even more momentum as we move through the new month of March. Okay, so that's the video, you guys. Before we get into the Russell 2000, before we talk technicals, if you aren't yet part of Waves Capital, if you aren't a member of my complete portfolio and daily trade alerts, then what are you doing, you guys? The month of February was amazing. The portfolio, or options portfolio, well over doubled in the month of February. We took plenty of profits, and again, our small cap over large cap thesis is really starting to pick up steam. If you guys want to join the winning team, if you want to ride all of the waves that I see mounting on the horizon in the month of March, then check out the first link in the description of this video. That'll take you to this page. From here, you go to my complete portfolio daily trade alerts. This pretty straightforward. If you don't know how to trade options, then I would suggest checking this out. I recently lowered the price. I don't know how long I'm going to keep it at this low level, but exciting times are here. So check this out if you don't know how to trade options. I did my best to make it as comprehensive but simple as possible. But if you do know how to trade options, then check this out. $15 a month, $40 for every 3 months. You can even try it free for 7 days if you just want to dip your toe in the water. And just unsubscribe if you don't like it. I mean, that goes for all of these. Just you can always unsubscribe, but no one's stopping you. But good times are here. I'm so excited for what the future has in store. And really, the month of March is looking very promising right now. And I'm excited to talk about these two trades. Once again, if you guys want to join Waves Cap, if you want to join the Capital, it's the first link in the description. Appreciate it if you do. If not, no worries at all. So, you know what? Before, we'll just bang out the charts back to back, kick it off with the Russell 2000, and then move on to Apple. But before you do that, let's cover the fundamentals, okay? Cover our fundamental basis. Why have I thought for so long, and I know many of you share the sentiment and have shared the sentiment, why have I thought or believed that small cap stocks, small to mid cap stocks, I should say, would begin to outperform large to mega cap stocks, okay? It is for the reason right here. This is Yardeni research. If you guys pretty much want any data set that you can think of in the markets for at least large indices, Yardeni research is the best I've ever come across. So go check out their site. They provide amazing free information. Okay, so this figure right here is forward PE ratios. PE stands for price to earnings ratios for large cap and mid cap stocks. Okay, you can see here. This might be a little small for you guys, but the red line is the S&P 500 large cap. This line is the S&P. I can't even tell what that is. It's honestly super. Okay, red line, S&P 500. Blue line, S&P 400 mid cap. Green line, small cap, and so on and so forth. You guys can definitely see that for now. Okay, so that'll give you some context as to this chart. Right now, you can see that the S&P 500, which again, large mega caps, pretty much the big dogs of the stock market, are trading at a PE of 20.5 as of February 29th. Okay, so yesterday as I'm recording this, it's March 1st. And the S&P 600 small cap forward PE is currently at 14.3. Okay, I'm not saying that in this current market environment with high interest rates, with there's capital still on the sidelines, investors are still a bit hesitant. It makes sense that large caps, mega caps, more well-established companies that are profitable have been thriving over the past year or so, okay? But interest rate cuts are now on the horizon. That has been signaled by the Fed. That is confirmed for some point during 2024. Is it March? Is it June? How many rate cuts are going to come? Who knows? But it is almost inevitable that at some point this year there will be a rate cut. And as soon as rate cuts happen, I mean, even now that they're on the horizon, risk appetite is coming back. That's a reason Bitcoin is pretty much on track for new all-time highs. It might be at an all-time high by the time you watch this video, to be honest. Risk assets are back. And small to mid-cap stocks are categorized in that risk asset category. When the bulls are running, when risk appetite is high, when the markets are excited, when there's just more optimism surrounding the markets as a whole, that's when small caps thrive. And I'm not going to say that small caps are going to completely surpass large caps as far as forward PE goes, but I do think that large caps could come down a bit. I think 15 to 20 is historically healthy. So these aren't unhealthy ranges, but I do think that they will find parity in a sense, that there will be some a reversion, some mean reversion of sorts. And I do think that the S&P, even if the S&P 500 and large caps continue to kind of climb, maybe go sideways, I still think small caps have room to significantly move up this PE ladder, okay? And even when we look at the IWM, keep in mind, you guys, the S&P 500, the SPY, the Qs, the NASDAQ, they're both at new all-time highs. Pretty much they both just achieved new all-time highs today. When we zoom out here on the Russell 2000, I can just kind of, before we zoom in, while we're zoomed out, I'll discuss kind of this long-term ascending channel that does play into my short to medium-term target. You can see that the Russell 2000 is still well below its all-time high. Let's do a price range here. We are still 15% below the Russell 2000's prior all-time high from back in November of 2021. So again, forward PE, small caps are still historically undervalued relative to large mega caps. And the Russell 2000 is still well below its prior all-time high, while the S&P 500 and NASDAQ, once again, are pretty much claiming new all-time highs by the day. Literally today, they both hit new all-time highs. Okay, so keep that in mind, you guys. This long-term channel, this does play into my medium-term my medium-term price target. You can see here the Russell 2000, it obviously dipped below this channel for a long time during COVID. There's the past few years have been crazy, but this is the general channel that the Russell 2000 is in. This is what I would consider to be the macro channel. Again, this white line, these two white lines are a macro channel. And I do think that along with my short-term thesis, this is, there's a little spoiler right there. I'll get rid of that. But along with my short-term thesis, that this line right here of broken support will come into play as new resistance. This trend line intersects with the line of support on the macro ascending channel. Again, very long-term, like decade-long ascending channel on April 30th. Let's just call it May 1st. Around a price of $265. Is it possible for the Russell 2000 to climb? How high would that be? 30% in the span of 2 months. It's optimistic, but it's absolutely possible. If you round that down, that's only about like 0.5% a day. Okay, it's very unlikely that we just climb 0.5% a day. But again, just to put it into perspective, I think it's entirely possible. And again, given all of the macro fundamental factors in play right now, I wouldn't be surprised at all if we were to see it. But as far as trades go, I will say that I do think that this line of prior support will be tested as new resistance. It's completely dependent. The price target, I should say, is completely dependent upon when this line is tested. If we test it over the next 2 weeks, say the markets really go crazy, that'll take us up to about $240 if we were to test it by March 19th, okay, by mid to late March. And that would take us up, 17, 18%. Again, sounds optimistic, but it's I wouldn't be surprised at all if we see it. And always know, you guys, my money is where my mouth is. If you guys are a part of Waves Capital, you would know that the Russell 2000 has been an amazing trade so far for us. And really, Apple has been an amazing short for us so far as well. But the Russell 2000, I will just give you guys my preferred call position for the Russell right now. Again, we've already made a healthy amount of gains in this position, so I'm sure the members of Waves Capital won't be too upset. But excuse me, my current call position that I feel comfortable sharing on the YouTube channel is a 419, excuse me, April 19th, $220 call, okay? April 19th expiration, $220 strike price. That is a contract that I'm comfortable saying I own. And obviously, not financial advice, but you do with this information what you choose to, okay? On the other hand, once again, is Apple. Apple is forming a descending triangle. So you can see here, Russell 2000, as we saw in the intro clip, or intro, I guess, little background, the Russell 2000 hit a new 52-week high today, March 1st, new 52-week high. In doing so, the Russell 2000 also broke out of this ascending triangle pattern. This is a bullish channel. Sorry, I'm bouncing all over the place right now. I forgot to mention this. The Russell 2000 broke out of a bullish ascending triangle pattern. You can see right here, bullish ascending triangle, bullish pattern, okay? With this new 52-week high, the Russell 2000 is broken out, and this is incredibly bullish on top of already like very, very bullish 1D RSI. You can see here that the RSI line of RSI has just corrected, bounced off of its EMA, or its exponential moving average, this white line that's kind of intersecting the blue line, which is the RSI itself, moving upwards. It's in the dead center. It's at healthy levels, nowhere near overbought. And that's the exciting thing. I do actually think we will probably start to get to overbought levels here soon. And that's very good news for the Russell. 4-hour Stokes, let's just go look. 4-hour RSI also looking bullish. Again, pretty healthy from a short to medium term time horizon, which is why I use 4-hour and 1D candles. It's for that short to medium term time horizon. Looking very, very bullish. Okay, so that said, once again, on the contrary, on the opposite side of the technical spectrum, as I said earlier, is Apple. Apple, again, inverse, printing a descending triangle pattern. And also, as of today, broke below, I would say, found a successful resolution of this descending triangle pattern, which is a bearish pattern, okay? I feel like that's pretty obvious. We just covered an ascending triangle, bullish pattern. Descending triangle is a bearish pattern, typically breaks out to the downside. Now, Apple, looking at, again, 1D RSI, very bearish, below its EMA, turning down. 1D stochastic RSI curling downwards, both very, very bearish, and really, this is like my cherry on top whenever I'm looking at charts on TradingView. Don't put a whole lot of weight on it, but if I have high conviction in a thesis, I always like to see this. Apple right now, from a technical perspective, is reading a strong sell on TradingView's technical meter, and they have plenty of algorithms in place to probably make this pretty accurate, so I like to see that as well. Okay, that said, where are my targets? And after I cover targets, I'll also share my put position, my primary put position with you guys as well. Okay, right now, I do think it's possible that the apple can fall real far from the tree. Okay, I think that this line of broken resistance, you can see a very, very clear line of resistance. 1, 2, 3 touch points, broken above, haven't retested it as new support yet. A line of resistance this strong or this meaningful, I do believe will come into play as new support. That would take down Apple. If Apple were to test the intersection of this broken line of resistance and the prior line of support on this channel that was broken above in November of 23, so a few months ago now, if it's to test the intersection of these two trend lines, that would result in, over the next 2 weeks, this would be by March 15th, a 14% descent to about $1.55, I'll say, over the next 2 weeks. And again, as I said with IWM, 0.5% climb every day, this would be roughly a 1% descent every day. For a company like Apple, that's pretty extreme. Apple has a $2.8 trillion market cap, so some bad news would have to come out over the weekend or over the next couple of weeks in order for this to happen. But I wouldn't be surprised at all to see it. Once again, know my money's on it. And this chart is just so incredibly bearish, which is why I'm so bullish on my puts. The put position I currently have for Apple is a $419, $165 put. Okay? IWM is $220, $419. Call. Apple is $165, $419 put. Okay? So, again, I'm not telling you what to do, but know that my money is where my mouth is. My money's behind everything I just discussed. And I'm really looking forward to what the month of March has in store for Waves Cap. For the last time, if you guys want to join the team, if you want my daily trade alerts, if you want to know what my entire portfolio looks like on a daily basis, and when I update it, again, I send these puppies out every morning during trading hours. That's the first link in the description. If you do join, welcome aboard. Welcome to the winning team, and I look forward to riding waves with you guys in the future. Until next time, you guys, always remember, take action, make waves. Peace.